Let's continue saying the thing I hate myself for saying. I don't get it. I don't get this box. What is this box? What is going on in this box? I don't understand. Where are they getting all these numbers? Which ones are given? Which ones are calculated? They're not explaining anything. They just listed a bunch of numbers. Come on, this textbook is terrible. Either this textbook is terrible or I'm getting stupider as the years go on. Did they literally just give you all of these numbers? Or did they somehow derive these numbers from these numbers? Let's show how stupid I am by doing 12% times 600,000. I mean, 12%, that's per year. Like 12% of 600,000. 72,000. Yeah, that's great. That's literally what that is. 9% of 2 million. Is 180,000. That seems to be what this is. I mean, this is yearly interest. That was funny. I thought this interest percentage was based on per year. Of course. Grades. Total interest over total principal equals what? What is this computation? This is the weighted average accumulated expenditure. This is the weighted average interest rate. Please just show me what you're going on here. I mean, what's going on? It's gonna break my brain to try to understand this whole section. Great. Why have I become unintelligent? Oh, come on. They built a building for $1.4 million. They paid $100,000 for land. There's land and a building. Oh, come on, now they're making it super confusing. Gotta be kidding me, dude. You gotta be kidding me. Now they're combining the building of a building and purchasing land into one transaction, making everything more complicated. Their payments were these amounts during 2020. The building was completed by December 31st, 2020. Basically, they just combined both of them into one. That's very, Stop. I'm so stupid I can't even think of the word I'm trying to think of. Wow! Oh, man. Okay. There you go, $750,000. 15% 3-year note. Oh. Now we will compute the weighted average accumulated expenditures. We already know how to do that because we looked at this box. I understand this box. You multiply the payment by the amount of time that it will be, and then you get the weighted average. See? Because I can do this. See, look. This one is going to be full 12 months. 12 out of 12. This one is going to only be 10, and blah, 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 blah. And this amount will be zeros, so then you get your weighted average expenditures of $820,000. Next step. What's the next step? What's the avoidable interest? Oh my gosh. You have to compute the avoidable interest. You take 750. Here's these three things here. These are the three things. Why are we only using one of them? Because I'm stupid. B. We have 15%, 10%, and 12%. Hello, buddies? This is fun. This is fun. Brain. Get a hold of your... Please try to comprehend this stuff, please. Weighted average. Weighted average. Okay, so they actually did the thing I thought. They took the result from this as 820,000. What? No! What on earth? Wait. What? What? What are they doing? What are they doing? What are they doing? What is going on here? What the heck is this? What the? What? It looks like they did this times this. Wait. No. What is this? What is this? What is going on? What is everything? Oh. Oh, hi. Hey. I know where this is from. It's from this. But why is it from this? I mean, this is specific construction debt. And then there's other debt. Other debt. Specific construction debt and other debt. We have specific construction debt. 15% is this. And then you have avoidable interest. Then you have A. This is the amount by which the weighted average accumulated expenditures exceeds the specific construction loan. Okay, so the specific construction loan. Okay. Here's the specific construction loan. Here is the expenditures. So you do this minus this and gets this. Wow. Multiplied by 0.1104. Oh, so that's going to be fun. How do we get that one? So first of all, we have the things specifically for the construction. Secondly, this one is the accumulated expenditure. And this one is, you multiply 10% times this to get this. Multiply 12% times this to get this. Then you add this to this to get this, and you also add this to this, apparently. What? And then you have total interest over total principal, so you have this divided by this. Oh my gosh. Well, I mean, I know what's going on, I just don't know the reasoning behind it. I'm not like, I don't get the logic, I just get the process. I don't get the... Right now what's happening is I understand the process, but I do not understand the logic behind the process. That was I know basically what's going on is I know that you do this times this is this times this is this plus this is this plus this is this divided by this is this. And then you put this here, and then you do this times this gets this, and then you do this plus this equals this, and this is avoidable interest. And then you compare avoidable interest with what? The actual interest cost. How do you calculate actual interest? The construction note, the 5-year note, the 10-year bond, and then, so yeah, that's pretty simple. And you compare this with this. And which one is lower? This one. Therefore, this is the one that you include. So, oh my god. And then here's all the journal entries. Land, 100,000. Okay, where's 100,000? What? What? Oh yeah, because they bought the land for 100,000 on January 1st. Buildings, construction in process, cash 210,000. So basically, the first payment covered the land and it covered part of the construction of the building. So you have that. Then March 1st, you have 300,000 because that's their payment on March 1st for buildings. May 1st, 540,000. And then December 31st is their final payment. Then they have some more things. They have some more entries to put in here. There's 239,500. That's the interest, the actual interest paid. However, you must do something else besides just putting cash, because they paid this much in cash for the interest. They paid this much in cash for the interest. Now there's two other entries because we already calculated the avoidable interest. So how do you report an avoidable interest? Or how do you report the lower of avoidable interest and blah blah blah? Well, the way you report it is you put interest expense. Oh no. You put buildings. You paid $120,228 for buildings. You include that as part of your building cost. The remaining amount, that's the difference between this and this, is interest expense. We're only 11 pages through. Man. This is going to be so fun when we try to do these types of questions in class. That's the entire point of me studying this right now anyways. Mostly so that I can have a bit of an easier time doing the problems in class. Also, it will be a little bit easier to study for the tests. Obviously, if I study for some of the stuff right now. Okay. Dude, they're literally... Okay, so here we go. So in the income statement, here's how you report it. You have other expenses and losses. Interest expense, because we have... what? Oh, weird. So basically, instead of reporting it as this amount here, you report this minus this equals this. That's hilarious. Interest expense less capitalized interest. So there you go. Man. Expenditures for land. You sniffed. That was a sniffy. We have finally finished. After all that time, we finally finished the second learning objective. There's still 3 more to get through. Come on, this is forever. Oh, man. Like assets. I wonder if reading it out loud will help. Probably not. Companies should record property, plant, and equipment at the fair value of what they give. Wait, what? Fair value of what they give up, or at the fair value of the asset received. Wait a minute. Wait just a minute. What are they talking about? What the heck? I'm just gonna completely ignore this weird thing where I'm not understanding how this doesn't contradict with some earlier part of the chapter. Great. Why am I so stupid? Like, even though I keep saying I'm extremely stupid, I managed to get... Oh! I did get a 77% on the exam, which is still a bad score. It's a bad result. 77% is not something to be happy about. But I don't care, because at this point I just care about passing the class. And also maintaining at least a GPA that's like, what's the limit for GPA? I can't remember. Is it 2.5? Basically, I just have to average B's in all my classes, have an overall average of a B to graduate. That's literally all I care about. So, like, a bunch of classes could probably be really mediocre, and I would still easily graduate. That was funny. Like, my GPA last semester, where I really struggled in that one class, it was still like decently good. It was like, what's the minimum? What is the average of a B? Wait, did I get a B or a B minus? A B minus and an A minus. So there's B plus. So it's like the middle of a B and a B plus. So I actually still was above what I needed to be in order to graduate. I was like, a high B was the average. Wait, no, it was exactly halfway between a B and a B plus. Whatever score is halfway between B and a B plus is basically what I averaged last summer semester in terms of grades, because one class was a B minus and one was an A minus. Yeah, it's funny how the things I care about in life have completely have gradually decreased over time. To where now I basically don't care about anything. I mean, sure, most people don't care about the debate between whether you should do whatever this is. The way to report a cash discount. People disagree on how you should report a cash discount. Guess what? I don't care. I mean, probably most people don't care about that either. But among the people who are accounting majors, how many of those people care? How many of them care? You would think that they're supposed to care because they're accounting majors, but I don't. That was... You know what would be nice is if you could take college classes. I wish college classes didn't have deadlines. Then I could just do it at my own pace. In other words, slower. What if you don't care about how long it takes you to finish it? And if you if you are more motivated to finish it more quickly, then you work more quickly. If you are feeling if you're either busy or you're being lazy, because apparently I'm lazy, then you could take a break and there's no consequences. That was funny. Yeah, but what if you just want to work at your own pace? And if I could work at my own pace, you know what? I wish these classes it's way too time consuming for me to drive to class all day long and sit in a lecture where it's not even that beneficial to me, because all of the lectures I have could be easily replaced with just online material. No offense to the professors. Then I wouldn't have to drive a million miles, and I could work at my own pace. And if I could work at my own pace, I would be much more motivated to actually do things. I wonder how efficiently I worked when I could work at my own pace on YouTube videos. I made like 15 YouTube videos in a course of 8 months. Is that a bad pace? Probably. It was like one video every 2 weeks or something. And the quality of video was terrible. I am a piece of garbage. Robot spray painter. Great. $100,000, 5 years, 0 interest-bearing notes. The prevailing market rate is 10%. Dude. Wait a minute. Oh my goodness. Did I get lucky? Because I don't think we had a single test question involving the financial thingamajig. Oh my goodness. Dude, I just realized that. We didn't have any questions involving this type of thing. We didn't have any test questions involving that. I got lucky there, because I may have messed it up if we did. Now, it's not that complicated. It's just that the textbook freaking sucks at explaining how to do that. Like, I was able to do it just fine in corporate finance. I was able to do pretty well in corporate finance. Not last summer, but the previous summer. In 2021, I did just fine in that class. because the curriculum was actually good. It actually explained things well. Unlike this. That was funny. It was doing the exact same type of problems except more complicated, and yet I was able to get it more easily. Man, this textbook is terrible. I wonder if this textbook was written by accountants. It wasn't written by educators, it was written by accountants who have no idea how to explain things to people. That's great. And I can tell that I have accountants as professors. I don't know, maybe that's not true. I don't have educators as professors. I have accountants as professors. All right, let's see. Well, they didn't show the computation of this. The computation of this was in a footnote. Thanks a lot. Let's see here, folks. Oh, I think they used a table. They didn't use a financial calculator. It would have been freaking nice. Wait, so... I need to figure out, it's going to be so fun to figure out later, what I need to enter into a financial calculator to get the answer to this question. Because this textbook is terrible. Okay, this textbook assumes that you don't have access to a financial calculator, so instead they have you refer to a table. So I guess that technically, a lot of, that's fine. They're assuming that you don't have a financial calculator, so how am I supposed to berate them for not explaining how to use a financial calculator if they assume you don't have one? I just need to figure out what I need to type in to get the present value of that. But they did the payment of $20,000. Number of years is 5. 10% interest rate. That's all you type? That's all you need to type in? Is that it? Anyways, they came up with $75,000. And then there's a discount on notes payable, equipment. So date of purchase, you do that. End of first year. This is very similar to some other problems we did previously. This is very similar to that. So you have a payment of $20,000. You also include 2 entries, which is interest expense and discount on notes payable. Pause. End of second year, of course the interest expense is different every year. How are they getting these interest expense payments? How? They must be using some kind of schedule or something. Whatever amortization thingamajig is going on, where they're paying a different interest expense every year. So what they did was 100,000 minus 24,184 times 10%. How did you get that number? They got the. So at least they did explain this. So what they did was, holy crap, they did this minus this. Why did they do this minus this? It's basically oh, that's going to be fun to do as a homework problem. What if we have to do that on a test? Lump sum purchase. Stop. There's football. It's so hilarious how I bought NFL Plus Premium and now I barely even use it. At the time I bought it, I was looking forward to watching so many football games, and now I just don't feel motivated to do that at all. So what a great amount of money I just spent there. What a very useful way to spend my money on something that I lost interest in immediately after buying it. Ooh. Ooh. Oh. Ow. Ooh. Ooh. Can you please stop? Ooh. E. A. I. We. I. Oi. Why is there so many white marks on the floor? Where did that happen from? What is all that? I mean, how long has that been there and me not even noticing it was there? We're going so slowly through this chapter. I hate everything. I hate how they said that you value it at historical cost and instead of fair value, and then in the next section they're like, yep, use fair value. Wait, what? I thought you just said. Several assets for $80,000. Hello? They sold. There's the book value and the fair value. These are the fair and book values of the things that they bought. They bought them for $80,000. So you have to allocate the land because it's a lump sum for 3 different things. So what you do is you ignore fair value And you take the percentage of the thing divided by the total thing in the fair value, and then you multiply it times your final price, and then you get that. I mean, I've already done that before in previous accounting class. That's not even that hard. Issuance of stock. All of accounting is mostly just basic arithmetic. You just do multiplication, addition, subtraction, division. Sometimes you have a financial calculator thingy. You have a teeny tiny bit of algebra, but not very often, really. But anyways, this isn't really, it's kind of like a math class, but it's like a 50% math, 50% conceptual information class, and the math section of the class is like, it's like basic arithmetic, but it's every single problem is a word problem. That's one. That is what you do in accounting. Oh, yay! Stop. Issuing securities. I think the reason I got through the last chapter so quickly was because I think I maybe just ignored all the math and instead just read through the stuff and then didn't bother thinking about it. What? What? Issuance of stock? What the heck? What the? I will pay you. Instead of paying you in cash, I will issue common stock. Stop. Purchased some land. So they issued 500,000 shares of common stock. Can you please shut up? Par value $10 that have a fair value of $12 per share. You have 500 times 12 is land. Common stock 500,000 times 10 paid in capital in excess of par. Common stock. I mean, that's pretty simple. Exchanges. Can I please get to 5? No, I'm still not to page 16 yet. Oh, I don't care about the controversy. I finally reached page 16. Durr. Exchanges. Loss situations. I don't care about the rationale. Trades used machine. I am pretty much entirely comparable to a kid who was held back in school because of the fact that I didn't take enough classes per semester. I dropped 3 classes, and I basically did not go to school for an entire year. So I am exactly comparable to that. I am basically the kid who was held back in school. During college years, but in elementary school I skipped a grade. Until my senior year when I was weird and stupid. So I was homeschooled for the senior year, which I didn't really lose a year. I lost a couple of months because I finished my senior year a little bit more slowly than normal, but it didn't lose an entire year. Anyway, I finished my senior year in like July or something. But anyways, like right now, if you count the year that I took off of school as a year of school, that means that I am currently a 5th year student. I am in my 5th year of college, and I'm not going to be finished with my 4-year degree until the middle of my 6th year of college. It will be a 5.5 years. It will have taken me 5.5 years to finish a 4-year degree. I finished the 2-year degree in 2 years, and then the rest of the 4-year degree took another 3.5 years, even though it was supposed to take 2 years. I dropped 2 classes in 2021. Was that the thing that caused me to take an extra 1.5 years? No. I was already behind when I got to UW Platteville, because when I did my 2-year degree, I wasted way too much time in the 2-year degree, taking a ton of extra classes that were probably not necessary. Plus, I'm Because yes, I finished the 2-year degree in 2 years. But even if I had not dropped a single class, I still wouldn't have been able to finish the accounting degree in 2 years. I don't think that would have been possible physically. Maybe it would have been. If I had taken 5 classes a semester or something. Every semester. But instead, I took 5 classes first semester. Second semester, I took 5, but then I dropped 2, so I ended up with only 3. And then during the summer, I took 3, 2 of which were ones that I dropped in the last semester. The next 2 semesters after that, I did nothing. Then in the summer semester, I took 2 classes, and now I'm taking 4. Can I stop? And according to my advisor, I won't be finished with my degree until the end of 2023. So basically, they gave the old machine plus $9,000 to obtain a new machine. List price of the new machine. Less trade-in allowance. Cash payment. Dude. Fair value of used machine. You add the cash payment plus the fair value of the used machine to equal the cost of the new machine. Their transaction was reported as follows. Equipment, $13,000. Accumulated depreciation. Okay, so basically you are canceling the old machine by getting rid of because accumulated depreciation is what? Is that a contra asset? Is accumulated depreciation a contra asset? That was funny. The loss on disposal. Okay, first of all, you have equipment. Where'd you get $12,000 from? Wow. What? It was the original cost of the machine. So how are you going to cancel out the $12,000? Oh, so confusing. You compute that cash to be $7,000 because you already computed it here. Equipment was the original cost. The accumulated depreciation, we already know that. We know the cost of the new machine. Where's the $2,000 coming from? Trying to figure that out. Loss on disposal of equipment. Well, you have to combine the 4,000. So basically, where is the 2,000? I wish you could compute the 2,000 some other way than just balance balance both sides of this so that they balance. But can you please tell me how to calculate the loss on disposal of equipment? Well, you earned a certain amount of money. You earned $9,000 for something, that was worth 11? No, that's not how it works. You got rid of your equipment. You originally bought the equipment for 12,000. You got rid of the equipment for 9,000. Okay. Oh, I'm so confused. How are you getting the loss on disposal of equipment? It won't explain it. It won't explain it. It says the used machine has a value of $8,000 and a fair value of $6,000. Is that where the 2,000 is coming from? Is that where it's coming from? Because that's 2,000 difference. Its book value is this, and its fair value is this. So there's your loss. I guess that's where you get the loss. Okay. Because I'd rather not just be like, oh, just balance both sides. I'd rather know why this is the case. Hilarious. I actually did that on the test, though. I think for one of the questions, one of the amounts, I just balanced both sides of the entry to calculate one of the amounts, which is not really exactly how you're supposed to do it. You're supposed to generate all the amounts independently, and then they're supposed to just balance naturally. Because if you just do that, you could make a mistake. That was fine. I had no idea that when you put your mouse over it, the image of the thingy came up. Huh. I'm such an idiot. Look at this. The thing I just figured out all by myself. They just explained it. See, look, fair value, book value equals loss. Good job, me. I figured this out by myself. I'm so smart. That was fun. I don't care about the explanation. Goodbye, explanation. Gain. Let's say they gained. Well, you have... what is going on here? They exchanged a number of used trucks plus cash for a semi-truck. Semi-truck. The used trucks have a combined value book. Stop. The used trucks have a combined book value of $42,000. Cost of $64,000 less $22,000 of accumulated depreciation. The fair market value of the trucks is $49,000. They paid $11,000 in cash for the semi-truck. So the fair value of the trucks exchanged is $49,000. The cash paid is that, so the cost of the semi-truck was $60,000. That's different from this other one, because this other one, you didn't do the fair value plus the cash paid. What you did was list price of new machine minus trade-in allowance equals the cash payment due. Because they didn't give you the cash payment, they gave you the allowance. And then you add the fair value of the machine. So it's the only difference is that they didn't give you cash in this one, and the other one they did give you cash. Really? The exchange. The trucks. This is the cost of the truck. This is the accumulated depreciation. This is the book. No, 64. This is the original cost of the truck. This is the cash paid. You calculate the gain on disposal because you have 42 or 49 minus 42. Oh, really? It's not just 49 minus 42. Yes, it is. Because yeah. So no cash received. We have covered two scenarios. One scenario, a loss situation. They paid cash. Why didn't they just tell you the amount of cash paid? That's going to be arranged. Why didn't they just tell you what the cash payment was? In this situation, they lost. In the second situation, a gain situation has commercial substance. What? Second situation, lacks commercial substance, no cash received. Now assume that in this exchange, the economic position of Interstate did not change significantly. Okay. In this case, defer the gain of $7,000, reduce the basis of the semi-truck. You could either do fair value of the semi-truck, less gain deferred equals the basis of semi-truck, or book value of used trucks plus cash paid equals the basis of semi-truck. Oh my gosh. Oh. Trucks. Basis of semi-truck. Accumulated depreciation, trucks, cash. And the thing missing is the gain and the what. Compared to before, I'm messing with this chair. Before, here's the difference. What's the difference? Now you have 6411, and 22. Those three things are the same, but these two things are different. The cost of the truck is different. The gain is different. There's no gain, and you do this minus this equals 53,000. That's the difference. So that's pretty simple. Wow. Deferred gain. Lacks commercial substance, some cash received. Now you must recognize a portion of the gain. Recognized gain is equal to cash received divided by cash received plus fair value of other assets received times total gain equals recognized gain. You do equation. Oh! You traded in used machinery with a book value of $60,000. A cost of this minus accumulated depreciation of this and a fair value of this receives in exchange a machine with a fair value of $90,000 plus cash. You received cash. Oh. Huh. total gain on the exchange. First, you calculate what is the total gain. First, you have fair value of the machine that you gave up minus the book value of the machine you gave up equals the gain. That's it. Simple. Now you use your equation. When a transaction lacks commercial substance, a company defers gain. However, you receive cash. You recognize a partial gain. Therefore, you use equation. Okay, cash received, they said, was $10,000, and then the fair value of the assets received, it said it was $90,000 right there. So you equal, and then you multiply it by this number here, and you get $4,000 of gain. Oh my gosh, my brain. I mean, future me is going to be extremely happy that I went through this. It's going to be extremely happy that I kind of already am familiar with all the stuff that I just read. Owie, 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 owie. Oh. I once got a 50% on a test. Dude, that class was so interesting. So at NICC, I took a physics class. What an intelligent idea for me to take a physics class. I should not have taken that class. Thankfully, I had a pretty good professor, so I was able to get through most of the class just fine. However, and it was also very interesting because that was the closest I ever actually was to making friends at school. It sounds pathetic, but really the only time I actually made friends at school was during that class. Because there were like 3 people in the class, and we kind of became friends throughout the class, but unfortunately I was an idiot and once the class was over, the friendship ended because I didn't even get the guy's number. That was funny. And we weren't even that good of friends. Hey. But the whole point of this whole ramble was the fact that in that class, I got a 50% on the final exam. Dude. Now you might be wondering, how on earth did you pass the class if you got a 50%? It's because I basically did extremely well for the entire class until the very last exam where I got 50%. That is the worst exam I've ever taken in my entire life. I think my final grade in the class was either a B or a B minus. Before taking the exam, my grade was probably an A. Do they have A pluses at that school? I can't remember. I think my grade in the class was like a 97%. And then after I took the exam, my grade went down to like 84%. It's so funny. Dude. You know when that was? I think that was like 2019. Man, that was a long time ago. That's such a long time ago. I feel, it's so weird, but like, I feel kind of old because I feel like I've kind of been, technically I've only been an adult for 4 years, which is still a long time. But like 10 years ago, I feel like the current phase of my life started in like, when I was in like high school. And you know when I started high school? 2014. Wait, was it 2014? Let me think. 12, 13. Yeah, 2014. I started high school in 2014. That was 8 years ago. Insane. It's been 8 years since I started high school. So much time has passed. A ridiculously long amount of time has passed. Wasting time. Hey, I need to hurry up and finish because